Hello and welcome back to Core Finance. I'm Matt Brown, joined by Paul Wallace, trading coach and founder of London Traders Network, and we're going to talk about Ireland and specifically, well, Dublin, one of my favourite European cities, so I'm very glad to be talking about this on the show, and a city and obviously Ireland as a country that has done very, very well over recent years. Will that continue though?
Yeah, good question. Morning, Matt. I want to talk about a little bit about Ireland. You know, I was living there up until about 18 months ago, and I was looking at moving back this year. But of course, doing my kind of research, doing my due diligence, it's come to me about the sort of the cost of living there. And so that's what I thought I'd talk about there, because it has huge implications in terms of we are coming towards Brexit is happening, and the question is really, is Ireland going to price itself out of a post-Brexit bonanza?
And you've brought along a few charts. We'll start off with a chart, I should say, just showing this growth that we've seen in Ireland.
There we go. So this is the ISEC, the Irish Stock Exchange. It's a monthly chart. You can see that when you look at that, you'd be thinking, well, I'm sure everything's grand. It's been a great thing. So it's been on a tear for the last few years. So that little blue line, that's actually when I moved to Ireland. So I like to think that I played my part. I tell people it's due to my copious consumption of Irish carbohydrates, bread, apple pie, Guinness, etc.
Vitamin G, I
exactly,
like to call it.
Vitamin G. That's what helped power up there. So when you look at that chart, you think this is fantastic. Everything's rosy in Ireland. If you go to Dublin at the moment, then the town is busy. And it's absolutely buzzing, and everybody's partying like it's 2007. But invariably, as you dig a little bit deeper, you start to realise there's a darker, deeper story going on. And that's probably what I was going to touch upon there. So Brexit's happening, all right, and invariably, what we've had is four sort of cities having a little bit of a bun fight about who's going to sort of who's going to basically benefit the most in a post-Brexit world. We've got Amsterdam, Frankfurt, Paris, and Dublin. Paris, nobody's going to Paris, all right, okay, whatever Macron says, nobody's going to Paris. Amsterdam was a little bit of a dark horse, all right, and the reason behind Amsterdam is that it actually has scupper, which means they have direct connections to the Far East, okay, and if you haven't got direct connections to the Far East, you're not a player, which is one of the drags on Dublin. And then invariably, you have Frankfurt, which seems to have copped most of the contracts, or most of have won the most so far, but I think that is that's a bit of a misnomer. My kind of friends, who've been offered the opportunity to move there, describe it as a German Milton Keynes. They're not in any way keen to.
There's no culture, the schools, the restaurants, etc. And there is the question mark: if you're being moved to Frankfurt, does the company really want you?
I hadn't thought of that.
So just bear that in mind.
I hadn't thought of that, man. That's a great idea. I hadn't thought of that. But within that, Dublin was fighting, and invariably, they have the politicians have been talking a great game about how much business is going to come their way. All right, but actually, what's the conversation between what the politicians are telling people and what you're finding if you speak to the relocation companies? Okay, the people who are being contacted by companies and individuals to discuss and understand. Right, well, what is the state of play in Dublin and Ireland at the moment? And that is telling a little bit of a different story. That's taking the sheen off that, and I thought we'd touch upon that in case any of your viewers are considering it as a move. I'm doing my community service here in helping giving a little bit of insight. So I think on the next slide I've got. So as I said, everyone's partying like it's 2007, but there's actually, there's a real drag on Ireland at the moment, okay, and that drag is effectively the cost of living is huge, all right. To either to rent property, to buy property is astounding. Now it was never really cheap, but I think there's been like a 60% rise in house prices in the last 2 years alone. Rents are just going through the absolute roof, and you can see that there's reports there about Dublin is just a ridiculously overpriced city, and so there's a squeeze there on basically on property. When I moved to Dublin, okay, in 2012, there was not a single crane over the sky. Then they were still in the depths of the doom and the despair from the crash. Now there's up to 70 cranes, okay, over the skyline of Dublin. They're going mad building it. But what I'd say, I reckon, probably about 2/3 of those cranes are building office blocks, right? But the problem is there is not the infrastructure behind that in terms of the amount and the quality of housing, the sort of the public transport is nowhere near as good as London, which is as you perhaps you'd expect. And all of these things carry a drag on the kind of the Irish economy and the, let's say, the viewpoint of Ireland as a really good possible post-London location. So I thought I'd give a few more details there. So for those who don't know, Republic of Ireland, okay, population 4.5 million. You've got a tax base of about 1.98 million. Within that, you've got civil public sector employees, all right, of around about 250,000. Now, that I've heard numbers between about 225 and 325, and that doesn't include the Quangos, okay, people there. There's about approximately 1,000.
Quasi-autonomous, non-government organisations.
Sorry,
my political.
There you go. Yeah. So we've got this. You've got a tax base of 2 million people, but you've got let's say a drag of civil sector employees in terms of their liabilities, in terms of costs and pensions, and that is so you've got around about sort of 85% of the people working to pay for about 12 to 15% of the people. And as we go on to the next slide, I'll show you some details there. So these are stats from both the UK and the Ireland, all right? So in Ireland, weekly average public sector pay, €920. Private sector pay is about €650 a week.
That's a huge gap.
There's a 40% differential. That's massive. There. There's massive, absolutely massive.
It's like Greece almost. I mean,
it is. In the old days, in the very old days, you would accept, that someone working in public sector would get probably a good pension because their wages were normally, well below what private sector were. But now it's completely changed. Public sector pay is where it's at in Ireland. Furthermore, their pension offering is stunning. Okay, work till you're 60, get 150% of your pension and 50% of your salary for the rest of your days. Whereas if you're a private sector guy, you work until you're 66 for the minimum state. So there's a massive, huge liability there that causes taxes to be high elsewhere to cover and pay for this huge Irish public sector liability. And you've got the UK numbers there, right? So just to give you a little bit of a reflection that if you're working in what my Irish friends called the Irish swindle service, then you are well and truly on that gravy train. And I just got a few more stats there. Okay, so wages in the Irish education sector exceed the Eurozone's average by 54%. Healthcare and social workers, they're by 39% above the Eurozone average. So as I said, if you're on that, if you're in that kind of in that sector, you're doing very, 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 very well for yourself. And it's pretty much everybody else that is paying for that. Okay, so they're paying high taxes. The corporation tax in Ireland, as we know, is low. So if you're a corporation, you're getting a great job.
Yes.
But if you're the average working guy, all right, then you're getting stiffed left, right, and
squeezed in the middle.
Exactly. All right. So it's even the unemployment benefit is double what you get in the UK. So then you're getting on to, you've got 23% VAT, some of the highest business rates in Europe. Energy charges are the highest in Europe, in Ireland, okay? That's, so you've got another drag there. And you've also got the most expensive car insurance in Europe as well, all right? So all of these things, all of these costs are building up on,
huge costs of living.
Absolutely, huge costs of living, okay? And of course, that takes the sheen off. If you're, as you say, trying to get people to relocate out of London and they're starting to see this and then you're having to make a decision on where to go, well then suddenly people, as an individual basis, people start to say, well, do you know what, actually maybe I'm not, maybe Dublin isn't the place for me. And so to kind of I think the final Irish slide there is just really just a case of if wait for the slide, is just a case of, there we go, we've got expensive homes, expensive rents, expensive cars, expensive insurance, high cost of living, VAT high, all right? So you've got huge high taxation on the working guy. And my question is, well, is Ireland pricing itself out of the game, all right? There is change coming post-Brexit, okay, good and bad, all right? But, the question I'd be asking is Ireland really in a position to really benefit from it as much as the politicians are saying?
Have they played their trump card regarding the English language, for starters, too much, and location to the UK? These are two things. I mean, one could argue Paris is closer than Frankfurt. It's not too far, but are they the trump cards? Is this the English language barrier?
They are. One of the island's selling points has been is that they also have a very young population, and they have, I think, it's probably the best educated youth population in Europe, and that's a, let's say, a selling point to corporations. The reality is, though, corporations were moving to Ireland because they were getting offered stunning tax deals of 1%, 2%, okay? Which has meant that Ireland is now, fallen out with the French and the Germans. They're not too happy about that, okay? And so I suspect what we're going to see with the CCTB, the sort of common corporation tax, across Europe, that is going to have an impact upon Ireland as well. Will fall through, but they had all of those, let's say, those trump cards, but the reality was corporation tax was just very, very attractive. So
they may get left out in the cold. Well, hopefully this evening you're not left out in the cold. You're in a nice warm pub, enjoying a nice cold Guinness.
Indeed.
I'm very tempted myself, but just talk us through the London Traders Network, and I'm sure you'll be talking about Ireland and lots of other issues that affect traders.
Absolutely. Well, as always, when I come on here, I always say, if you disagree with that, then come and have a chat with me about it. I love to hear opposing views. I love to hear it. Okay, it's what helps sharpen my own view. But London Traders Network. Okay, 6 socials a year, and it really is just a social. Come, have a beer and a chat. Traders, get away from your screens, all right? Old school networking, as in you actually go and see a physical human being, have a beer and a chat. It's in the cellar bar of the New Moon Pub on Grace Church Street. So we're on tonight from 6:30, and then the next one will be, I think, 18th of January, 2018.
Super. Well, as always, thank you very much for coming in and joining us today. Good luck with your beers tonight. Thank you for coming in.
Cheers, Matt. You're welcome.